What's going on, guys? Welcome into the midweek update video with the wheel strategy, the 20K wheel strategy. Just a heads up, I am going to try to make these videos more concise, more right down to the meat and potatoes right away, as opposed to delving in the market analysis and economic data. Unless something is like very urgent and must be talked about, I'm just going to not worry about it. The S&P 500 is at all-time highs. That's not new news. There's nothing groundbreaking with economic data, so I'm not even going to bother. I'm just going to get right into the wheel strategy because that's what this channel is about. If something earth-shattering happens, I got to cover it, obviously. But for now, nothing really new. The market's moving up, and by the time I get to it in these videos, particularly like the weekly recap, it's old news anyway, so I'm just not even going to bother. So here we go, wheel strategy. Here's the account. We'll get a little closer for you. This is 11:40, almost noontime on Wednesday. So middle of the day, $20,542 in the account right now. Down 131 today. So yesterday was actually a really nice day. If I go to the 1 week chart, this was, this is the 7th right now. So this was the 6th right here where the account was up almost 20,700. It did hit 20,700. And that was when JD was up like 6%. I hold 200 shares of JD, so that makes a big difference. But then this morning, or right now, is down 5%. So we that kind of hurt the account. JD is a volatile one. So that's just the ebbs and flows of that stock as the Chinese economy and Chinese stock market is kind of in shambles and has its ups and downs, and it's wild. But I don't mind this position. I have covered call sold on it. We're good. Here are my positions so far on the week. I have my CSIQ put. I have my JD calls. This is nothing new. I have calls sold on Mosaic and Marathon Oil. These are positions that I just got this week. I got assigned last week. Right here are the stock positions. 200 shares of JD, 100 shares of Mosaic, 200 shares of Marathon Oil. And I sold calls on both of them. On all of them, actually. So those positions are working for me and doing very well. I also have a wheel watch list that I will want to go through at some point. But I have a watch list in Robinhood. I also have it in TradingView. And I'll try to cover these names for you guys because picking a stock with the wheel strategy can be challenging, because there's a lot of factors to go into it. I like to look at fundamentals particularly, because with the wheel strategy, you're kind of closer on the spectrum to investing than you are to just day trading. So you gotta have to combine the fundamental elements to it as well, because you gotta prepare to hold the stock. And if you gotta hold the stock in a rough patch, you need to have those core values, that core fundamental confidence that the stock or that the company is good and will thrive and have its time down the road. So it can be a little tricky finding wheel strategy stocks. I do have a little bit of a list here, like 13 names. So I'll kind of keep you guys in the loop with that, because that's always important to know. So let's just get into TradingView now. Look at some of the stocks that we got going on here. We'll just cover my positions right now. Just take a look at them. Look at the 30-minute chart here. Here is JD. So Monday, was this Monday? No, this was Monday. Monday we had a decent day, nice rally after a somewhat of a flat open. But then yesterday we had a massive 6% green day, big gap up and a rally. And then we're kind of giving that back right now, down 5%. But you can see with my lines here, my cost basis is 23.25. We're right near it, 35 cents off my cost basis. We're actually above my break even. So that's good. So it's good to be sitting in this range. I have calls sold at the $24 strike, which we were above at the end of the day yesterday. Now we're below it. So these calls are working. This is going to go till Friday. Got 25 cents for them. And this could go either way because this stock is that volatile and can jump around quite a bit. I mean, this is the daily chart. You can see how broken it is. Just tons of gaps because it really is that volatile. So, so far so good. It's chilling near my cost basis. Gotta love that. And it's volatile, so I'm getting good premium for it. We'll see how it ends up later in the week. Take a look at Mosaic. This one is kind of struggling, unfortunately. It is down 1.5% today. You can see it's pretty much giving back all of yesterday's gains. And Monday wasn't a good start. It gapped down and sold off quite a bit. Got under $30 per share. Now I have shares at 31, and right now we're under 30 right at this moment, 29.92. Just red, red, red on the 30-minute chart here. Not what you like to see, but at the very least, I did get calls sold for this week at my cost basis. So I have 100 shares at 31, and I sold one call at 31. So I don't stand to gain anything on the upside, no share appreciation, but I'm still getting the desired return on my investment by collecting the premium that I did. And at the moment, it doesn't even seem like I'm going to get assigned anyway. So we will see. But obviously, there's still all day today, Thursday, and Friday. Anything can happen. But not the greatest looking couple of days here. Moving on to Marathon Oil. The new position on the week as well. I have 200 shares at $22.50. My break even is $22.33. I sold calls at the $22.50 strike. I sold calls at my cost basis, just like Mosaic, which means I stand to get nothing on the upside, no share appreciation potential. But again, because of the premium I collected, I still get my desired return on investment if I do happen to lose the position this week. And unfortunately, I couldn't get above my cost basis because Monday was this day right here. Of course, we had a gap down and a sell-off to start the week. And I don't want to lose the opportunity to sell calls, because if this thing really did continue lower, I wouldn't have been able to sell calls even at my cost basis. So I wanted to make sure at the very least I got premium collected on the week, even if it meant that I lose the upside of the share appreciation. At or above my cost basis, that's where I can sell calls, not below. So unfortunately, I couldn't get above my cost basis. The premium was too cheap at the $23 strike, which is way up here. And on Monday, when the stock was at $22.19, it wasn't viable. But then yesterday, we got all the way up to $22.80. So, obviously, had I just waited, I could have got the 23 strike. I could have benefited from this upwards move. But instead, I'm capped at $22.50. It is what it is. Right now, we're pretty much at that covered call. We're at my cost basis, so it's still anyone's game. We'll have to see, but I'm happy with the situation as it is. Like I said, the premium collected on the calls yields a great return on investment. So we'll have to watch that one. CSIQ is my cash secured put, so I don't own this one right now. I did a couple weeks ago. I got assigned on covered calls, sold it, playing it again with a cash secured put at the $20.50 strike level. I only sold one. I can sell up to two, but I'm just throwing a starter position out there with just one put. So in the event I get assigned on this, if that happens, then I'll look to sell another put, maybe at the 19 strike, and get a better average by kind of entering into the position 100 shares at a time as opposed to all in with two contracts. That's just how I decided to play this one at this time. It was kind of having an accelerated sell-off in this period, so I just kind of wanted to take it slow. I got really good premium for the one put as it was, and in the event that it sold off even more, I'd be able to take advantage and get another put sold at an even better level and have an increased chance of a put expiring worthless, or just get a much better cost basis on the full 200 shares if I were to get assigned on both puts. So just started with one, and right now it's looking good, particularly because we're up 2.5% today. Yesterday and Monday was a different story. Monday we were down like 5%, sold all the way off down to towards $20.80, pretty close to my strike. Tuesday we kind of pulled away from that 2050 put, and then today we're up even higher. So again, this thing can move quick too. It can move 5% in a day. So it is still possible I can get assigned. But right now, looking okay with a put sold there. And those are my open positions. And I didn't even bring up the wheel graphic yet. Here we go. All the positions that I just mentioned are down below on this banner. JD shares, JD call, Marathon Oil shares, Marathon Oil call, Mosaic shares, Mosaic call, and CSIQ put. However, if you look at the February profits, it's not zero. Now, this is the first week of February as far as I'm concerned with my trading. And we're only a couple of days into the week, so how do I have $25 profit already? Well, there was another trade that is now over and done with, and that was with Celsius. Last thing we'll talk about, CELH is the ticker symbol. Celsius Holdings, they are an energy drink company, a beverage company that has energy drinks that have been increasingly popular as of late. You've probably heard of it. You've probably drank in them. Who knows? But you can see the chart here. Go to the weekly. You can see the growth that they've experienced with just the price action, obviously, but it's completely reflective of the growth of the company. If you take a look at some of their financials, go to revenue here, you can see the revenue growth. 2019, 2020, 2021, 2022, massive revenue growth as they've become increasingly popular, as I said, and that's why the chart has gone up so much. This came up on the scanner. I took a look at it. I've heard of the drinks. I know how popular they've become, and I've seen the growth of the chart and believe that not only is this price level warranted, I also think there's possible growth to come in the future. So I thought this would be a decent company to play. It's also pretty volatile, so it's great for option selling. Because it grew so much, it's not really fair to compare prior price action to where it is now. I don't think that if it breaks support, it's just going to go all the way back down here, because it's now making like double the amount of revenue now as it was back here. So it's not really fair to compare the chart to that much of prior price action. So it's kind of, you got to be more shorter term with it, as opposed to something like Bristol Myers, which has had this massive like 10-year support level, or like Disney, same thing, a base that's been held up for 10 years. It's not like that. It's a fresh company. So I got to look at more short-term price action. If you go back as far as June 2023, which is like, what, 8 months ago, it's formed a base. It formed a base around $45 to $50, and it's been holding up. In November, December, it tested it, popped up. Even recently over here, it came pretty close. It cracked under $50 and now rallies up to $56. Pretty big moves, I got to say. You can see the volatility here. I was able to sell a put on it on Monday when it had this pretty big drop. This was the start of Monday. It dropped over 3% in 30 minutes, down towards $50.30. And that allowed me to sell a put at the 47.50 strike. And I collect 28 cents for it. And you got to mind you, this was almost 7% out of the money. For the same week, for this week, I sold a put that was over 7% out of the money, not earnings related whatsoever, and I was able to get good premium for it. That's how volatile the stock can be, because right after I sold the put, it actually rallied. So from the low of day to the close, it rallied 5%, and then the next day, it rallied another 4 or 5% just on Tuesday. Yesterday, 4.8% yesterday, and it's up a percent right now. So it went from $50 to $56 in just a couple days. That's what I'm saying of this thing being volatile. That's why I want to be safe with it. I am a little cautious on it because of these big whips. I want to make sure that if I sell a put, it is well within this demand zone. I don't want to be a little aggressive on it. I don't want to sell at 50 or 51. I want to make sure it's down around $48, $47, $46 per share. Right now that it's at $56, it is too high up, and it's just on watch. So I'm just going to keep it on the watch list and wait for another red day or a sell-off to where I can play this level again. This is the only level I want to play. I don't want to be more aggressive than this. So we will keep this on the list for now. But yeah, I was able to close the put the very next day. Like I said, after this drop, I sold the put around here, and then yesterday we were way up here, and the put decayed 90%, and I was able to close it for $3 and profited $25. So that was a really quick trade. And it's a company that I'm interested in playing. It's on the list, and you guys can play it too. So one thing that I looked at, it came up on the screener, on the scanner, but then I go a little bit further. In TradingView, I go down here to analyst ratings on the right, click see forecast, because I want to see what analysts are saying. I want to see EPS, I want to see revenue, I want to see debt, all of that. So look at the analysts, 16 analyst ratings, 13 of 16 say strong buy. Strong buy, not buy, strong buy. And that's 13 out of 16 analysts. 2 of them say hold, 1 says sell. So that's very encouraging. The minimum price target is above where it is right now at $64 per share. Usually the minimum is below the current price because you have those bear analysts. In this case, the minimum's well above where it is now. So that's also very encouraging. EPS, although it did have a loss in 2022, like I said, the company saw some pretty tremendous growth. So EPS ended up becoming positive. It was profitable and growing. Revenue was growing. That's great. And I like to look at debt too. So I'll click on more financials, go to statements. Total debt here is in Q3 2023 is 1.3 million. Their total assets are 1.5 billion. So the debt to asset ratio is very small. They're not too levered up on debt, which is great. So everything is pretty good about it. It doesn't pay a dividend, but that it doesn't need to. It's not a huge requirement. It actually just had a stock split, a 3-for-1 stock split that got it down to this price level. So that means it must have been around $160 a share before this. So yeah, I just wanted to show you guys that. It was a new name to the watch list, kind of show you the due diligence process as well. And this was a successful trade that got me $25 on the week. Everything else we're just gonna wait for. JD, Marathon Oil, Mosaic, and CSIQ. So that's it, guys. That's the midweek update. I hope you enjoyed. If you did, hit that like button. Comment down below of any suggestions that you might want to see in future videos. Subscribe for more content, and I will see you all next time.